We are going to invite our panelists here on stage, institutional adoption of digital assets. So I'm going to wait here for Luca, Mico, Lorenzo, Chiara, and Niccolò to find a seat under their photos.
Good morning, everyone, and welcome to the institutional panel of ETHMilan. Today, we'll explore how traditional financial institutions and crypto-native players are navigating this transformation from tokenization and custody to the rise of crypto ETPs and increasing interest of institutional investors in digital assets. We are joined by 4 outstanding professionals bringing diverse perspectives from banking, asset management, and fintech. In order, we have Mico Curatolo, Head of DLT and Digital Assets at Baanca Sella, Lorenzo Amoroso, Head of Operations at Hercle, Chiara El Rikabi, Director and Head of Italy and Ticino at 21 Shares, and Niccolò Bardoscia, Head of Digital Asset Trading and Investments at Intesa Sanpaolo. So, let's start with a broader view. Mico and Niccolò, representing your respective banks, how do you see the role of digital assets over the next few years? Are we talking about a long-term infrastructure change or more of a new asset class to integrate into traditional systems?
Yeah, so I think digital assets can become that infrastructure layer that underpins all of finance, traditional finance. This can happen over time, but if I look at digital assets today, they are all about crypto. Bitcoin is worth $2 trillion. All of tokenized assets combined are worth 20 billion, so 100 times smaller. So digital assets today are all about crypto, and it's pretty interesting that one of the most successful crypto products out there, the Bitcoin ETF, is in fact a traditional ETF. It doesn't use crypto technology at all. So I think this can happen over the long term, but right now it's mostly about crypto. And what's interesting about crypto is that the retail got there before the institutions did. And this is very strange because usually it's not what happened with asset classes. Usually the institutions come and then the retail gets there eventually. Here it's the opposite. It's interesting how for any retail, it basically takes an hour maybe to set up a wallet and open an account at an exchange and start engaging in digital assets. And for a bank like us, it can take years. At Intesa, it took us 2 years to get our first Bitcoin trade done this year. And this is not because we were particularly slow. In fact, we were one of the fastest to get there. We were one of the first banks to actually trade digital assets. And this is because for a bank, it takes a long time to set up the whole thing to be able to get there. It takes time to have the infrastructure, the custody infrastructure, the trading infrastructure to trade. And I'm saying this for the half of you which is not Intesa Sanpaolo, by the way, because there are a lot of people from Intesa Sanpaolo today who know very well how complicated it is for a bank to get there. So trading, custody, all needs to be configured. There needs to be a compliance framework in place. You want to do things the right way. You want to do anti-money laundering well. You want to have a whole new cybersecurity, basically to handle the new risks which come from digital assets. And you want to have the legal and fiscal setup, which is non-trivial. And you want to adhere to all the regulations. Now we have MiCAR in Europe. And MiCAR is definitely an enabler for a bank like us to start engaging in digital assets. But we went through all this. Now we have the technology to start handling digital assets, and we're starting to see the benefits of using digital assets in finance, even beyond crypto. We've seen this with our first digital bond transaction, where we bought a 25 million bond issued by CDP, Cassa Depositi e Prestiti, another Italian bank. And that was issued on the Polygon blockchain, so a very much public blockchain using crypto technology under the hood. And we saw in that deal how we could close a bond transaction in just a few hours instead of 3 to 5 days. And we've seen how there is a risk reduction using digital assets because a smart contract can handle the assets leg and the cash leg at the same time, removing the counterparty risk in a transaction. And we've seen also how it is cheap to use crypto technology because the whole transaction, we spent like a few cents in gas fees to transact $25 million, 25 million euros actually, in this case. So basically, digital assets are this technology which can make transactions cheaper, faster, better, safer, and we are seeing all these benefits, and I believe these benefits will show up in the long term, and I believe we are going to a future where this can really underpin all of financial infrastructure, and maybe in a not too distant future, in 5, 10 years, maybe 15 years, but everything eventually will be a token.
Ciao, first of all, glad to be here. I'm completely on the same page of Niccolò. I believe the end game will be a completely different infrastructure, bringing most of today's services around financial intermediation on chain. And we will see it on many different verticals that are now, long-lasting verticals in banking activities, from payments to treasuries solution to securities. As was said by Niccolò, there's few elements that need to be there if you want to take this opportunity. Obviously, from a bank perspective, regulation is one, and therefore, for a long time, Italian players, but not only, had this kind of wait-and-see approach. And now we have a framework. Frankly speaking, is not the easiest one. But we need to deal and provides us a path. And considering that framework, the additional thing to have is a clear view, a clear strategy on where to go. And this is mostly depending on the footprint of each bank. For example, Sella and Intesa are very different animals, let's say. We have a strong push coming from customers, and therefore, in some way, banks need to close the gap. I think we will be more keen to start with retail-based services rather than corporate or institutional one, but as well, you need to keep your organization to be ready to do so. And the third element is be ready. So it is not a technological effort only. Obviously, we will get there and the whole infrastructure will evolve accordingly, but it is a matter of internal functions and also business teams that need to get reshuffled out of the peculiarities of these solutions.
Okay, thank you, Mico. And building on that, Lorenzo, from the perspective of a crypto-native company, how do you see institutional adoption progressing? And what are the main drivers behind this shift? And what barriers still need to be overcome?
Yeah, I'd say that institutional adoption is steadily growing. We have seen different projects, pilots, and through the year. And so there is this concept that is shifting from crypto that are getting mainstream to something more deeper. So, I mean, building some infrastructure that is going to reshape, I would say, at least some services in the in the capital markets and in the payment infrastructure. So if I have to say which are the major drivers, for sure the colleagues have said Mico will be one of the major critical point in this case. For sure, it's gonna, reshape the competitive landscape of all the firms that are in the crypto space. some firms maybe will be pushed out, some other firms for sure will be pushed in by this new regulation, but at the end of the day, it's gonna increase the trust in this digital asset space, and more institutions are coming after it. Second point, we can say that infrastructure from a technological point of view is improving and improving more, and also the readiness behind it is improving. We have seen more custody institutional products, more compliant trading venues, and also I would say, some mitigation on the counterparty risk with the crypto firms is all of those stuff are maturing right now. And last point that I see, it's the advent of TradFi-like product. As Niccolò said before, ETP, ETF are, I mean, an easier way for institutional investor to go inside the market, maybe because they don't want to direct access to the spot market, or they cannot right now have direct access to the spot market. So this is an easier way to let institutional more adopt, I mean, Bitcoin and all the other asset. On the other side, the barriers are, I mean, the good old ones. Fragmentation, liquidity fragmentation is the first one, especially with Mico coming, crypto firms, especially in the trading side, that need to have order book only for European clients, and this is gonna create an even more level of fragmentation in the liquidity. And so actors like Hercle that try to be a single a single layer of liquidity providing can help to mitigate this first barrier. Another one is related to frameworks. I mean, on the technological point of view, we are in a really good point, I mean, but there are a lot of stuff like compliance check, AML, all of those ancillary services that for banks are like one of the major point in order to enter in this system that needs to be assessed in the right way. That's it's a point that gonna slow down a little bit the institutionalization of digital asset. And if I have to say, the last point is gonna remain the counterparty risk. Especially in trading, we see that institutions maybe do not trust foreign company or, I mean, crypto firms that are in some gray areas. And I mean, this gonna slow down a little bit the adoption as well. But on the other side, even this barrier can be mitigated maybe through, I mean, three-party agreements with maybe institutional bank that start doing crypto custody as a middle, I would say, as a escrow account in the middle, or delayed settlement, post-trade settlement. So there are a lot of new frameworks, even in the, I mean, in the trading space that can be done. So at the end of days, the barriers can be overcome in this way.
Yeah, we've spoken about adoption, and even as Lorenzo said, one of the key drivers on the institutional side has clearly been the rise of investment products. Chiara, what role have crypto ETFs and ETPs played in broadening access to digital assets, especially among traditional investors?
Yes, well, I like to answer to this question with a comparison. It's a very simple comparison, but in my opinion, it's very useful to understand the current situation of crypto adoption. In my opinion, ETPs or ETF on cryptocurrencies had a similar impact to what Windows had for personal computer. If we think about the past, the use of personal computer was not so common, and it was also quite complicated. We didn't have many tools. For example, there was the DOS system, which was used only by experts. At a certain point, Windows arrived, and Windows changed completely the scenario. In fact, at the beginning, Windows was a little bit expensive, but Windows made the use of personal computer easier. And now, thanks to Windows, the use of computer is spread all over the world. The same thing, in my opinion, is happening to cryptocurrency through ETPs or ETF. Through an ETP, it's much easier to get access to cryptocurrency because an investor can buy or sell crypto ETPs in the same way it usually buys or sells bonds or stocks. ETPs, thanks to the ETPs, the investor doesn't have to face technicalities like wallet, private keys, and so on. But in addition, ETPs makes things safer because a lot of people, a lot of investors who hold a big amount of cryptocurrency, especially Bitcoin, are very skeptical to disclose the amount of their holding because they are afraid of thieves or hacking attacks. So with an ETPs, it's much easier because there aren't any password or wallet to steal. And in addition, if we want to have a look at the crypto market, we can do a comparison between USA market and Europe market. In USA, the total money in crypto market is about 120 billion only for Bitcoin. If we consider ETFs on Ethereum, the total money in crypto ETP is about 135 billion, which is very different from Europe. The first fund in USA is iShares, and the second one is Fidelity. On the other side, we have Europe. The total money in crypto ETP is only 20 billion, but we have much more variety of financial instruments. We have about 220 products, and the key markets are at the moment Germany, Switzerland, but also Italy. So the size of the market are very different. In USA, the adoption is faster, there is more growth, but in Europe, we are not so lagging behind because we have at the moment a big variety of instruments.
Thank you, Chiara. As banks move deeper into the digital asset space, Mico, I'd like to come back to you. What types of services do you believe banks are best positioned to offer? And how do you see these services evolving in the short to medium term?
So I believe it is mostly depending by the customer base. So considering retail customer base, for sure, there's growing need for different custody solutions in which you rebuild the same trust that the client has with his own bank, also when dealing with digital assets. Especially when dealing with the risk of theft, and it's very common right now that people are forced to do transaction via their phone, having time locks, for example, or layers of protection, additional layer of protection when performing the transaction, it is a growing need. It is something that didn't exist a few years back, and is for sure something that we are seeing. There's an increasing demand for that. Other things that are classic services when dealing with a bank. For example, if a client passes away, what happens to my holdings in the wallet? There's no actual service in the market for that, and I believe banks are the best player to provide these, just because they have the habit to do so with other existing solution. And I can add much more layer on that when dealing with retail remittances, cross-border or P2P payments leveraging on stable coins. So there's quite a lot of services that a bank can provide to retails. One could argue that the big business is not there yet, and I can also see this point. That's why I believe another interesting customer base is the corporate one. When dealing with treasury services, when dealing with corporate payments, when dealing with internal transaction cross-border or even inside the Eurozone, even considering that the payment infrastructure here in Europe it's very effective, and this must be said. And in the end, but this will probably this will probably happen more in the long run rather in the short one. There's interbanking activities. To get there, the level of preparation and the development of infrastructure of each bank should get to another level compared to nowadays. And there are a few steps to be made to get there. For sure, custody is one of it. And that's why we are working on it, and this is not a secret since quite a while. As Niccolò clearly stated before, it's not easy for a bank to get there quickly, because there's a lot of job to be done, not only from the technical point of view, but the direction is quite clear, and I feel that in the medium term, all these customer base will get services from their bank.
Thank you, Mico. While on the other hand, fintechs are playing a key role in building the underlying infrastructure. Lorenzo, how do you see companies like Hercle bridging traditional finance and decentralized technologies? And what opportunity or risks are still underestimated in your opinion?
Yeah, I'd say that we see ourselves as a liquidity layer, so liquidity access for all the institutions and corporates also. Through our, I would say, strong banking and custody layer and orchestrator, and also building processes, especially for settlement and on the other ancillary services that we talked before. Regarding, I mean, the main opportunities that are maybe underestimated, Mico said something about stablecoin payments. I think it's one of the major underestimated point in this moment, because we see already some institutions and some corporate that are using it, especially for B2B side and I would say cross-border payments. But I mean, the level of flows and of funds that can be there is, I mean, difficult even to estimate, because if we talk about payments all over the world, we talk about trillions and trillions. And using the power of stablecoin in doing it, I mean, it's really game-changing. I mean, results are clear. We talk about 24/7 settlement, quite low counterparty risk, and I mean less intermediaries than a banking. I mean the banking payments, and you don't need to deal with cut-off time, intermediary banks, and all the problems that arise for those type of payment. Even as you said, Mico, in Europe we have a kind of really good, I mean, payment framework as for now. But I mean, I think that's a really game changer in the payment field. On the other side, as a crypto native firm, I think that an underestimated risk can be dealing with scalability. I mean, when you talk about a crypto native company that is growing and growing, you talk about volume, you talk about all the good stuff. But on the other side, when you deal especially with big actors on the other side, maybe it can be financial institution or big corporates, they are more and more demanding for all your frameworks, they are more and more demanding of all customization stuff. So you need to build from day one something that is really adaptable to all of the situation, to all of changes in regulation, to all of changes in compliance, and on the same way needs to be always safe and always protect funds, clients' funds, and that your service is like continuous during time with no downtime or else. So I think that companies like Hercle are not just helping TradeFi actors to access this world, but it's more on building the infrastructure that can easily let all the people and all the big clients operate in this world in a safe and scalable way.
Great points, Lorenzo. But now I'd like to take a look beyond the most established assets. Chiara, how does 21 Shares approach the broader digital asset landscape beyond Bitcoin and Ethereum? Which emerging crypto asset do you consider strategically relevant for institutional investors?
Beyond Bitcoin and Ethereum, now at 21 Shares, we are particularly bullish on SUI. SUI is worth about 2.81 with a daily average between 2.77 and 2.86. The 1 year performance was plus 200%, and it has a market capitalization of 11 billion. But what is SUI? SUI is a layer 1 crypto, and it's a competitor of Ethereum and Solana. We have noticed SUI because at the moment it's cheaper than Solana, and there are a lot of smart contracts that are growing on this blockchain. We are also bullish because in the future we are thinking about the possibility to launch a SUI ETF in the USA. Anyway, if you would like to have more insights about SUI, at 21 Shares we have an amazing research team, and I would be happy to provide you with some material about it. There are some points that I would like to highlight because they are very interesting in understanding the scenario about the future of this crypto. At the beginning, during the first 4 years of Bitcoin, there were no other cryptocurrency, and Bitcoin grew by more than 1,000%. After the second Bitcoin halving, Ethereum was created, and Ethereum had its better performance during its first 4 years. Then there was another halving, and after the third Bitcoin's halving, Solana came along, and Solana outperformed Bitcoin and Ethereum. So now the question is, after the 2024 halving, which crypto will be the next top performer in terms of growth? We don't have the crystal ball, we can't predict the future, and we don't give for sure financial advice. But we think that SUI can be a strong candidate. Anyway, SUI is not a crypto for anyone, but it's for those investors who have already invested in Bitcoin, Ethereum, and Solana. So I really suggest you to have a look at it.
Thank you, Chiara. And for the last question of the panel, let's turn back to the underlying infrastructure. Since public blockchains are increasingly seen as foundational layers for tokenization and settlement. Niccolò, from your perspective at Intesa Sanpaolo, do you see a future where platforms like Ethereum could support institutional-grade use cases, such as tokenized financial instruments or capital market infrastructure?
Yeah, so I actually think Ethereum is really well positioned to be an infrastructure layer for financial assets, for tokenization. If we look at tokenization today, 80% of it happens on Ethereum and its layer 2s. And if we take one of the most successful products which have been tokenized, the Beetle Money Market Fund by BlackRock, 95% of this product is on Ethereum and its layer 2s. And also if we look at stablecoin, which are of course another tokenized asset, tokenized cash that everybody's talking about now, 55% of stablecoins are on Ethereum and its layer 2s. So if you're doing tokenization today at a bank, at a financial institution, you are probably using Ethereum. Now, of course, Ethereum, it's probably not ready to actually become that infrastructure layer today for digital assets or assets more broadly. I think there are still a lot of issues. And probably the biggest issue is actually liquidity. Because I've been hearing a lot of people pitching tokenization as something that improves liquidity. This is just not true. if I issue a standard bond, everybody can buy it. If I issue a tokenized bond, nobody really can buy it, only the crypto natives, only people with a wallet, only financial institutions which have all this infrastructure can buy that bond. So if I have 1,000 buyers for a standard bond, I have 10 buyers for a tokenized bond. And even if we take the Beadle BlackRock Money Market Fund, it has 47 holders. So we're not talking about thousands of people or companies holding this product. Literally 47 companies are holding this product. And this is the biggest tokenized product out there. So it's pretty clear that we need to get better liquidity before Ethereum and other public blockchains can actually become the infrastructure layer for finance. And I think there are technical issues as well, not just liquidity. The biggest one is probably privacy. So like we've been hearing people over time criticizing public blockchains because they were too opaque, but the reality is that they're too transparent. So you can see everything that's going on, everybody trading anything on public blockchains. And this clearly is not ideal for especially retail trading. I can't show as a bank my customers' data real time to anybody. There are regulations which prevent us from doing that rightly. So, so we need to have better privacy on chain before we can actually scale digital asset technology or public blockchains as a layer for finance. And there are technologies going in that direction. There is ZK, there are other privacy preserving technologies, which I believe will grow over time and fix this issue, but it's going to take time. And the other issue is, of course, scalability. Ethereum and layer 2s, of course, are trying to get more scalable over time, but traditional markets like the NASDAQ transact 1,000 or even 10,000 transactions per second sometimes, and clearly we need a little bit of a better tech, more scalable tech to get there. And the other thing is composability. So I think this is where Ethereum really shines. Ethereum is really composable. There is all this DeFi, money Lego ethos, where people build smart contracts that other people can use to do cool things. And this is really cool. I would love to see more of that in TradFi. But the reality is that layer 2s are still very much fragmented. I can't really interoperate between layer 2s as much as I would. So we need a little bit of a better system there as well. And I know a lot of researchers on Ethereum are working on this, but once again, it's going to take time. So I think all these issues are actually solvable. I think Ethereum will get there over time, but yeah, it could take a long time, but it's very important to get there. And also, I think the question to ask is, what is the future going to look like if all of finance will go to public blockchains? Like, who are going to be the intermediaries? Are we going to use banks? Are we going to use crypto-native firms? Because we are seeing banks getting more and more into crypto and digital asset technology. On the other side, we are seeing crypto-native firms like Coinbase and Kraken starting to talk about tokenizing stocks and entering traditional markets. So where will I be trading my stocks? Will I be trading on Euronext or Borsa Italiana? Will I be trading on Coinbase in 10 years? I don't really know the answer, but I know that there is this convergence going on between the crypto natives and the banks, and it's very important for the banks to actually do that work and get the infrastructure layer, understand the technology, play around with crypto and digital assets, understand the risks. It's crucial not just to offer better services to clients, cheaper, faster, better, safer services. It's also key as a defensive play to be relevant, to still be relevant in a future which will eventually and inevitably get more and more digital over time.
Thanks to all of you for the insights. And we hope this panel has offered you a glimpse into how leading institutions are adapting to and shaping the future of finance. Thank you.